Good morning, everybody. Welcome to today's session of Market Moves. I'm the money lady, Cheree, and we're going to have a really quick conversation for all of my real estate agents, real estate investors, and anybody who's interested in learning about the market and how the market is affecting housing and how housing is affecting the mortgage rates and things like that. This is the right place to be. So, the first thing we're going to talk about this morning is what's the rate? Because I always get that question. Right now, the rates are if you're like over 780, you've got a great debt to income ratio, they're about 6.34%. They did tick up a little bit yesterday, but that is, where the rates that's where the rates are right now. So, big news is happening next week is that the Fed is meeting next week in order to figure out if they are going to keep rates the same. And these are the Fed rates, not the mortgage rates. I should say that. So, are they going to keep rates the same? Are they going to lower them? Are they going to raise them, etc.? I do want to show you this right here, which is the probability that the Fed will increase rates. So it's basically 100% probable, according to this resource called CME. They have the probabilities, 100% that they are going to actually increase the rate. Decrease the rate. Sorry. The question is, how much are they going to lower the rate next week? So we have here 87.2% that's saying that the target rate is going to go down about 350 basis points, and about 12.8% saying it's going to be between 375 to 400 basis points. So that's some information right there for all of my investors and realtors to know. Don't forget that the Fed rate does not directly parallel with the mortgage rates. So what does that mean? That means that if the Fed just reduces its rate by 25 basis points or 30 basis points, you won't see much fluctuation with the mortgage rates, because mortgage rates look at what the expected rates are for the next 18 months, and they basically go based on that trend. You will see a more of a fluctuation if rates don't go down at all, if the Fed decides to keep rates the way that they are, or if rates go down 50 basis points, for example, then you'll start to see mortgage rate fluctuations at that time. So, another topic that has come up is when we as mortgage lenders, when we do a pre-approval for somebody, or we have somebody that is getting a loan, we pull their FICO score. And the FICO score, the bureaus have decided to increase the fee with regards to how much it costs for us to pull those FICO scores for you. And you may say, well, how much and how does it affect me? Why do I care? Well, the fees are going up 50%. And that is for businesses like mortgage companies, that is a steep hike. So some lenders may choose to start charging for pre-approvals or for pulling the FICO scores for people upfront. That's not us, but there are some people who will decide to do that. Some lenders may decide to increase their lender fees on the back end in order to account for this FICO score increase. And then the third way, which for my real estate professionals, this is the problem that you may run into, is that some lenders may choose to cut corners when it comes to the pre-approvals. And they will cut corners because instead of pulling 2 or 3 bureaus in order to get the pre-approval and get an accurate debt to income ratio, they will scale back and only pull 1 bureau report. And there may be information on the other 2 reports that are not on that first report. So one of the biggest things that you want to do if you're a real estate professional and you're working with a lender is ask them how they intend to work with the FICO fee rate hike. And for us, for example, with an Envoy mortgage, we will still pull two bureaus because the chances of a debt not being on either one is very rare. So with our pre-approvals, you could at least have more of a comfort in knowing that the information that we're pulling is correct. The next thing, there's a topic right now about the hidden cost of home ownership. And especially for our first-time home buyers and the ones that we're serving, one of the things that we as real estate professionals may want to let our buyers know is that every year there's going to be potentially an increase in insurance, an increase in property taxes, and an increase in maintenance. And in the article, oh goodness, why is that not showing anymore? Here. In the article, one of the things that it said was that there's some sticker shock with regards to buyers, especially first-time home buyers. I don't know why this keeps doing this. There's some sticker shock with regards to buyers and first-time home buyers and the hidden cost of home ownership. And every year their mortgages increasing a little bit every year. So for example, my mortgage increased $100 a month. And that was because of some of the escrow issues, property taxes, and insurance went up. So just keeping people aware of that. The final topic that I have for you today is about finishing strong and starting stronger. So if you're anything like me, you've probably been preparing for 2026 for the past month. And most people are intending to begin their family time December 19th, okay, for the 2 weeks between Christmas and New Year. Got a mentor that said, when you're scheduled to work, work, and when you're scheduled to play, play. And what that means is for the next 2 weeks, if you're working through December 19th, for example, like if it's time to work, like really work, get those end of year things wrapped up so that you can finish strong and start stronger for 2026. So, and then when it's time to play, meaning it's time for family time, you know, we probably don't want to be as much on our devices and things like that. We really want to enjoy the family time so that our minds can rest. And then when we start work again on January 2nd or January 5th, we are ready to go. So that is it for Market Moves for today. If you are looking to purchase a home, definitely reach out to me. Call or text 571-583-4600. And I am here to help you. So thank you so much to Child Branch saying I'm listening to you at breakfast. I really appreciate that. That is it. Just wanted to do something super quick for all of you here today. All right. God bless. And I hope to talk to you soon. Take care.